We're good? YouTube? How are you? Facebook? Hello, Facebook. Ladies and gentlemen, we're going to talk about a myriad of issues. Tonight, we're going to answer a lot of questions that you need true answers for with no nonsense, nothing sugar coated, nothing, no caramel syrup on top. Just the real root of the problems with a lot of real root solutions. We're going to go through the front run pump and dump, the expert diagnosing trader, the true cure for FOMO. Are stop losses on every trade added value? How important is luck in trading? Why do you make money and give it back and keep repeating this vicious cycle? The lesson that I learned from my last big loss and what's working on earnings. Now, this is going to be the strategy value added here, as well as my final thoughts on this video. I am Mark Melnick, and this is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. Just want to make sure that everything is working here. I was up, tonight, and unfortunately, here I'm watching my New York Knicks, and I'm just sitting there thinking like that I just wasted 2 hours, 2.5 hours, whatever of my life watching my New York Knicks suck. So I said, you know what? Since I'm up and my kids are sleeping, why not do a video that will actually add value to your trading? I know it's late at night. I didn't get changed. This is not a fancy schmancy shirt. It's a Mitchell Robinson jersey, just by the way, his jersey number from last year. And I actually want to add true value to your trading. And I want to talk about the issues in trading. I'm going to talk about the issues and how Wall Street presents it because I was sitting here and I was listening to some videos tonight, and I was watching it, and I asked myself while watching these videos, I'm sitting there and I'm slamming like, I don't know if you guys can see like a little bit of redness here because I kept slamming my head on my hand on my head. Exactly. I can't even speak straight after slamming my head a bunch of times. I probably suffered a little mini concussion there. Just so much, so many a plethora of nonsense, a sea flowing upon thee of BS. And I said, you know what? At least I want to give my 2 cents on it. And I wanted to share something. So I literally made a list of things that I want to go tonight. I want to go through tonight. And just real quick, if you want to watch this video, pause it, watch this, and then click pause this, read this, and then hit play. Okay, let's get right into it. Um, So we're going to start off with, so many things here. And really, I'm going to go actually because I really don't take any big losses anymore. So thanks to a member of the room who's on tonight. Wow, we have hundreds of people here in the room even watching. I'm honored that you're up late at night listening. So I definitely want to bring you value. And I'm also going to talk about the lesson I learned from my last big loss, what's working on earnings now? And that is just really the important question. And this is the strategy value added here. And of course, I'm going to give my final thoughts on the video. So I'm just going to go through the list, and we're going to start off with the front run pump and dump. And this is the gray line of nonsense that most people fall for, and what the gurus like to do these days. And again, like who knows what's going to happen. I know every time I make these videos, there's like a couple people who are faces in the industry who are a little bit offended by these videos. And you know what I say to them? Don't be offended. Change. Change for the better of the community in which entrust you to serve them. And the front run pump and dump basically is basically a guru like me coming to you, and it's actually not what I do, but a guru like me coming to you, and maybe I used to do this 10 years ago, maybe I didn't, I don't even remember. I've been doing this job as a trading broadcaster for 12 years. They'll come to you and they'll say, I'm in a position. The most common way they do this is they're in a position when they're up money and then they announce it to their community for a final jolt. This is especially prevalent in small cap rooms, and I've spoken to a lot of traders over this weekend, a lot who love our service here at the Newsbeat Live Room, but this is not even a promotion for our room so much as it is trying to enlighten you to help you, whether you want to join our room or not. I won't even tell you how to join. How's that? I'm just genuinely here at night trying to help you. So what they'll do is they'll tell you they're in a position, but they're up a nickel, they're up a dime. And then what happens is they'll dump it to a room. There'll be a little volume spike. This is especially again prevalent in small cap rooms because you can't really, unless you're dealing with like massive size, move a Facebook or an Apple or a triple Qs or spiders. And what they'll do is they'll sell into it as they tell the position, I'm in a position. So if I come to you and I say, I'm in XYZ, of course, the insinuation that most of you would think is that I actually just purchased XYZ, for example, at this exact moment. However, the lie and what they do in the industry, and I do know people in the industry who do this to this day, and it's disgusting, and I'm not name dropping anyone, but at the same time, I'm not going to hide their dirty little secrets either while enlightening you. And what they'll do in this front run pump and dump strategy is they'll literally come out and say, I'm long, I'm in XYZ or I'm long XYZ. A fact. They're not even lying. But what you don't know is when and where they actually bought and got filled at XYZ. So what happens is you'll always have a number of people inside any given community, and again, this is more prevalent in the small cap community. It still happens with traders who, trade sub $10 names and things along those lines. As a generalization, it won't really happen with like a General Electric, but there are a few exceptions to that rule, like General Electric, and it's just a broad generalization. And then what happens is the traders in the room will throw in market orders. The guru, the talking head, will throw out offers to sell the security. And what they're doing is they're doing what I like to call, and again, maybe these terms will be used 30 years from now, and you'll be like, I remember that Mark Melnick guy using these terms. I call it the gray area pump and dump. It's gray area because they're not really lying to you or doing something illegal. They're telling you they're in a security. But the whole insinuation is people think that the guru just bought the stock or security or shorted the stock or security in real time. When in actuality, the guru opened up his position, maybe even waited 5, 10, 15, 20 seconds until he felt comfortable and was ready to give it to you, the subscriber. It's disgusting. It's deplorable. It is heinous. It should be illegal. It isn't because the guru isn't lying. Now, if he said, I just bought the security right now, this exact second, yeah, that would be a lie. But no, they just say, I'm in it. I'm in it. They'll tell you. Okay, moving on. Number two, the expert diagnosing trader. And I'm just going to add the word trader gurus, trader slash guru. Okay, I'll just add that in. And what these people do is they'll come to you and they'll present you a problem, and based on the fact that they could correctly diagnose you, the subliminal assumption, of course, is that they have the ability to actually help you. For example, does your trading feel like a grinding wheel? It just keeps you go up and down and up and down and up and down, and you're just chopping sideways, maybe even losing a little across the way. You're having a really difficult time making money in this environment. Do you feel like your losses are much bigger than your gains? Already, I just threw a blanket statement on 99% of every losing trader in the industry. I just cast a huge generalization blanket upon all of you. Well, then, let me show you a complex mix of nonsense and BS. I'll show you charts with weird symbols and this and whether you make and lose, and they pretend that they can actually help you. That is a lie. 99% of the time, it's a lie. Again, generalization, right? Because you're able to diagnose common issues in the industry does not mean that you can actually help traders. That's why all their trading rooms are still in the revolving door effect, where a line of marketing customers come in and the equal line of marketing customers go out. And even though they're around for years, their trading room size doesn't really fluctuate more than 10 to 25%, even though they've been around forever. Yet they're still making money because that line of traders coming in, you have to pay up front before you enter the nightclub, ladies and gentlemen. And as soon as you pay up front, you're in the air, you know, don't let the door hit you in the butt on the way out. Now, something that was actually surprising to me, and I'll go through that afterwards. So, again, the person who could diagnose your issues 99.9% of the time cannot actually help you solve your issues. Don't worry, I'm going to get into something that's very valuable here. Just want to go on. I'm going to actually show you what's working now and why it actually cures a lot of these issues. Not only that, I'm going to share my first lesson from my big loss. All right, the next one is the Fomo Cure. And this one I find amazing because this is something that, do you suffer from FOMO? What's FOMO? The fear of missing out. Well, we're in the largest room here. We have the most popular destination here. And you know how many traders are making money at any given point on any given day? There's always someone. And if you're sitting here and you're reading our chat, you're like, oh my God, that person caught that name, that name, that name, that. I'll put myself in this situation. And yes, it does hold true for other rooms as well. And then you might get FOMO, or whether it's in a chat room or not, maybe you traded a stock, you sold out, it started running, and you were mad at yourself because you should have, in hindsight, held that name. Then traders will talk about psychologists who offer you cures for FOMO. I've talked to some of the top psychologists, renowned psychologists in the world, let alone the United States of America. And I went out on a mission and put like sort of the boots on the ground approach by just literally reaching out and asking them if I can pick their brain and help them out and they can help me out maybe in some form or fashion. And I will tell you, the ones who are legitimately talking say it's easy to diagnose somebody with FOMO. It's easy to tell them what they need to do to fix their FOMO, but it never works. So even if I diagnose you with FOMO and tell you what to do to cure your FOMO, it actually won't work. There's one thing that has worked for tens of thousands of people that I've helped climb out of FOMO, and there's only one answer. You have to be making money consistently. You need to be making money 7 out of 10 times or better. Otherwise, you will suffer from FOMO. I know I suffered from FOMO again, I've been an active trader for 20 years. And people I know are so into videos where people are like, let me show you the names I like next week. And they're like, ooh, what is Mark Melnick watching next week? But it doesn't matter if the smartest people in the world show you all the best names ever, and I'm sure they're going to turn around and focus in on the ones that worked and ignore every single one that didn't work and say, you should have been in this one, and we gave you this one. You're like, oh my God, that person did. Again, those people are actually causing you FOMO by actually putting out those nonsensical videos, which you think are adding value, when in actuality, it's almost like a self-promotion for themselves. Because I can give you an example. I could give you the 100 names in the triple Qs. The triple Qs is the NASDAQ 100. There are 100 names. I could come out right now, and I would never do this, and say, I want to buy these 50 names and short the other 50 names. I'm probably going to be batting about 50% next week if I dumped all those names on your plate without knowing anything about the company. Facebook long, Apple short, Netflix long, Google short, Amazon long, this short, KLA 10 core short, whatever. And the whole point of that is to actually give the guru some substance, because what's going to happen is half of the users like you are going to focus on the winning names that the guru chose and say, wow, this is amazing. I played that Apple that Mark Melnick called long, and maybe I'll call Netflix short, and they'll be like, oh yeah, I took the Netflix short from Mark Melnick. And then you'll have another 50 people who saw the trades that they were focusing on not work and they walk away. But here's the thing. If I have 500 people watching me do a video like that, 250 of them are going to think that I'm smarter than I am, when in actuality, I could be a bumbling imbecile just spitting out names at you. That's why I don't spit out 100 names at you. And by 100, doesn't matter if it's 10, doesn't matter if it's 20. Think about that. Even if I'm spitting out 10 names at you, I could be right on 5 of them. Maybe on one week I'll be right on 7, and maybe on another week I'll be wrong on 7. But it's actually just a form of marketing. When I do a video, a special video about a name like Amron, which we called, going up, and I won't even pull up the chart. You could look at it yourself, AMRN. That was a special. I focused in on one name. I gave the reasonings. I gave what's going to happen. I talked about the AdCom, the advisory committee. That's different. Dropping names showing you a technical formation is an advanced form of marketing BS. Next one. Next one on the list. Stop losses on every trade add value, right? Do stop losses on every trade add value? Well, gurus like me, we buy names, and then all of a sudden, we buy these names, and where's your stop loss, Mr. Melnick? You bought XYZ at 50. Where's your stop? Stops? You want to know the truth to it? You shouldn't be getting stopped out on more than 10%, maybe 20% of your trades. You should be taking your losses earlier than your hardest stop. And I'll take the same thing from the flip side. Would you think I play one side of the story here, one side of the stick, so I sound intelligent? No, you're not supposed to hit your take profit target more than 10, 20% of the time. Okay? I'll play both sides of the table here, right? I'm not saying, cut your losses short, but let your winners run to the skies. We all heard that before. It's a lie. Guess what? The best firms in the world cannot do it. What on earth makes you think because you're following scam artist A, B, C, D, E, F, G, genius guru knows everything, HIJK, LMNOP, that they're going to change that? Goldman Sachs can't do it. Merrill Lynch can't do that. Why do you think you can again? How about we just be a little honest here with each other? You want to know what a stop loss is? A stop loss is a situation where something within a psychological OODA loop changes. If you don't know what an OODA loop is, OODA, you could look it up. I'm not going to go into it. It's basically a psychological loop where you keep playing the real-time events of what's happening. So for example, you bought Apple. So the triple Q's the NASDAQ 100. If it's going up 90 whatever percent of the time, Apple's going up, and vice versa when it goes down. So you buy shares of Apple, and you're going to want the market going up, or the triple Qs, or the NASDAQ 100, even that's weighted in the spiders. You want that thing actually going up. Now, what happens if it keeps going up? Well, maybe you do hit your take profit target. Maybe it goes beyond your take profit target. But you have to watch the market in real time. So to pretend that you can look for a logical stop in terms of not financial risk. Yes, a stop will show you exactly what you can lose. I'm betting $500. I'm buying 1,000 shares of this. I'm risking 50 cents. I'm risking $500. Yes, a stop loss will tell you that, but it also won't tell you what a complete imbecile that you could be as a trader by abiding by nothing else but that. That they don't tell you. You think you're garnering value when in actuality, you know, I'm trying to think of a funny analogy here. But in actuality, when you enter a trade, you could plan for certain things, sure, and yeah, like there is a point where you should just cut it off no matter what happens. I'm not arguing that. I'm arguing that if you are constantly hitting that point, if you are getting stopped out like 40, 50% of the time, or God forbid more, there is an inherent flaw in your entire strategy. An inherent flaw. Because it just means like, if I buy a stock and I see the market going up and going up and going up and going up and going up, and I might let it ride a little. And I see suddenly support lines on the market holding up and going up. And I'm not sure that it was going to happen before. But let's say I buy a stock and all of a sudden the market, you get US China trade war headline. Oh my God, it might not be signed by the end of this year, which was the geniuses at CNBC, whom, again, that point was refuted later and the market came back. But they came out and they said the US China trade war might not be signed this year. Hint, it's the end of November into December. Ding! Who really cares if it's not? Well, what if it's signed in mid-January? Does that change anything? Not really, no. But the market reaction algorithmic flow went down. Now, if you're sitting there holding a position, you see the market drop like that, you weren't expecting that when you bought the position in the first place. You needed to get the heck out of there. So how important are stop losses on every trade? Not that important. And no, I'm not insinuating you just sit there with no stop loss and let your stock ride down. I'm saying that once you open up a position, only what is happening in a real-time basis from that point forward is the only thing that can be indicative of where you should exit that position. That's it. If you see the market fumbling down, even if your position is up, even if you're break even, you know how many traders who keep hitting their stop losses never take a break even trade? And I stop and I look at them and I'm like, they don't know what the hell they're doing. They were taught that set it and forget it, which is, I know it rhymes, but I could say, your trading strategy sucks, or your trading strategy sucked, and you're expletived, and that also rhymes. How's that for set it and forget it? I'm just gonna forget about my trade. I bought in. I have a stop loss. I'm just gonna go like this and watch it. And I listen to people spew this nonsense in the industry, and that's why they fail. Anyway, moving on. How important is luck in trading? This is a good one. Step 5 here, right? Luck in trading is the most toxic, worst thing in the world that you can experience. Most people are going to get surprised. Like, how important is luck in trading? You better pray to God or whatever you believe in. Ding! This is not a Joel Osteen episode. You better pray to whatever you believe in that you are not a lucky trader or an unlucky trader. Now, why would luck destroy you? If you're lucky, you're probably going to blow up your account because the insinuation with you being lucky is that you're not going to be lucky every single time. You might, you know, put all your money on a number in roulette and spin the wheel and it hits. Doesn't mean when you do that again, it's going to happen or again or again or again. So let's say you're lucky and you just throw on a trade and good news comes out coincidentally right after you bought it with no warning prior. And your stock shoots up and you're up 10, 20, 30, 40, 50 grand. It's happened to me before. Then you take that money and you feel good. Wow, I was in the right place at the right time. Yeah, I got lucky. You know what you just did by smiling and getting excited over your lucky trade? You just reinforced to your brain that whatever you did is something that you need to experience again. And for all those traders who've had those big 40, 50, 60, 70, 80, 90, $100,000 trades, I would say every single one of them that I've ever spoken to have given that money back somehow in the future, like all of it, and maybe more. Because as soon as you rely on luck as a trader, your brain is going to rely on it, even if you don't. Luck? No. Unlucky? No. Statistical probabilities. What are the odds of this working? And this goes back to every single trading room on Wall Street that I have ever seen. My room included many years ago, not anymore. Every single room falling you in the 43-57 paradigm. Every single room out there, all their strategies will work about half the time if you're lucky, or between 43 and 57%, 7 up and 7 down from the 50% level. Now, why is that important? Well, first of all, it tricks your brain into not even understanding what the heck is happening. You'll go on a run, you'll get back losses, you'll go on a run, you'll get back losses because you keep doing strategies in which you shouldn't be doing. And brokers, by the way, love you when you do that because you're just sitting there and you're just trading and trading and trading, grinding your wheels. You think you're getting closer and closer, but in actuality, you couldn't be farther from where you needed to be. You see, if I'm doing something stupid in the market, I would rather lose money than make money. And people get like, what? Because I want my brain to tell me you don't want to do that in the future, Mark. People don't get that. People think luck and you want to know what's important in trading, not being lucky or unlucky the majority of the time. That is the most important thing in trading. Step 6, again, we're going to get into what's working on earnings right now in step 8. I'm going to tell you my last big loss, when it happened, what it was, what I learned from it. But we're going to go to step 6 first. Why do I make money and give it back and keep repeating this vicious cycle? You make money and give it back because you are exercising a slew of different strategies, and one of them are bad for you, or some of them are bad for you, or one to some of them are bad for you, and it's taking away from your winning strategies. Newsbeat Bandit course. The reason why, and again, I bring it up because it's really a psychology course. It's kind of funny that it shares 6 strategies and that's the headline. But in actuality, it's just a psychology course that actually gives you value to how to change your mind. I mean, the Newsbeat Bandit course really tells you it's the only course that I've ever seen, and I've made it, and I don't look at courses, but people have told me it's the only course they've ever seen where the course actually tells you that there's a chance that you might not want to do one single strategy that I do, and you might want to only do your strategies. The only course that I've ever seen that does that. It's actually quite amazing that it actually goes down like that. And I'm going to teach you how to stop losing money, track what you're doing, and do it with like real solutions. Like the advice that I'm going to give you, in terms of fixing yourself is something that can actually change your life. And no, I'm not charging you. I mean, you're watching me now. And I will get to it. But why do you keep making money and giving it back? You have to sit there and going back to the Bandit course, which I will not share a link for you. Contact T3 if you're interested. Again, I'm not here to promote you, but I am quoting it because I want you to go back and just map out all your strategies. What am I doing? If you have your own strategies, give it a name. Your strategies need a name. I don't care if you call it, the whatever. I don't call it Susan if that makes you sleep better at night. Whatever you want. You could call it whatever you want. I have my names of strategies one and done. Mark 5, VWAP reversal, this. Mark it down, see where you're going right or wrong, and then just stick with it. So for some reason, there was a market shift in the past 2 weeks. Now, yes, I've been making money every day. My P&L's looking a little better. And then we're dealing with 3.5 days next week. I'm having a very slow month. I'm having a very, very slow month. I'll share my P&L tomorrow, whatever. Like I'll do it at the end of the week or end of the month. I don't care. People people like to see, results of P&L, but results of P&L can be very deceiving. You have to show people the cost basis behind. But that's a whole nother story. I don't want to get into that. But you keep making money and losing money is because there's a strategy that you shouldn't fix. There's a strategy you should eliminate. When you have weaknesses in the market, when you want to start from scratch, you don't work on where you're weak. You eliminate completely where you're weak. Just see what you are strong at and start there. I don't care if it's one thing. Maybe you're good on this one single trade, this one idea. And I'm going to share with you an idea that's going to work, in my opinion, 75, 80, 85% of the time next week on every earnings name. I don't even know what's reporting. I'm going to give you a strategy tonight that's going to work probably that well next week, statistically speaking. I don't have a time travel machine. I will give it to you. But you keep making money and giving it back because there is something that you're doing that's losing you money overall. One of your strategies that are not working. So until you could actually come to me and say, I'll ask you this question that I need an answer for, which will help you if you keep making money and giving it back. What is the worst strategy that you apply every single day? I don't know. Look over your results. Tell me. Look over your results. People are like, oh, keep a trading journal. No, trading journals are BS. Do what I'm saying. Don't tell me what you were thinking when you were taking a trade. Why? Because the market is so dynamic and changes so much that if you're trying to think the same thing every single time when new information is being flooded to you, you're not going to have an answer in your journal. Don't keep a trading journal. It's a lie. It's BS. It doesn't really help people. Was I not supposed to say that? I know it's industry standard that, yeah, it's always good to track what you're doing and track what you're doing in the way I'm telling you. Show me where you tell me where you're weak, and I will tell you what to do with it. Don't even improve on it. Don't change it. Don't alter it. Don't shift it. Eliminate. Gone. Step 7. This is going to be a heartfelt one. My lesson learned from my last big loss. All right. I know my gains are a lot larger than my losses. Back in 2014, I don't remember the month. 2014, I had a $4,800 down day. And I know that doesn't seem massive compared considering I have all these five-figure days, but like I say, like every single year that I can remember, my 100th biggest gain, my 100th biggest day of the year, the 100th. Like I have my number one best day, number two, three, four, five. The 100th best day is usually 3 to 4 times larger than my number one down day. And it's again not I'm not boasting, it's a fact. But I did learn a lesson from my last biggest loss that helped me get to that point. So listen carefully. So it was back in 2014. I was making money consistently. I was like, you know, $500, $300, $1,500, $200, $2,000, like that. And my God, was I over trading. And then one day I overtraded at a certain time and I lost like I'm estimating now. It happened 5 years ago. Lost like four, five, $600 on a single trade. I needed to make that money back, and not only did I need to make that money back, as you could already guess, it was that stock that took my money that owed me the money. I didn't want to make it back. If I lost money, I don't remember the symbol, by the way. I don't remember the symbol, but if I lost money in XYZ, XYZ had to give me the money back because it took it from me. As if it were personal, as if the stock owed me something. So I size up, make 400, lose 500, make 600, lose 6, whatever it is. Like I'm scalping it throughout the entire day now. I'm hell bent on trading this name, which I shouldn't be at all after that point. I keep trading and trading it. Guess what I'm about to say? I end up the day up $380 after trading that name. So where was the lesson learned? I'll get to it. The very next day, there was another name which I lost, whatever, three, four, five, six, $700 on some scalping. And I remember what I did before to make the money back. Overtrade it. And I'll get my money back if I just work hard. I'm a hard worker. I'm diligent. Trading. That was the day where I lost. I don't remember what the commission rates. I mean, there weren't $0 commissions back then, really. I probably it was down around 5 grand on the day, like maybe 40 something hundred in P&L plus commissions would push me over the 5 grand. There were other names I traded as well. Let's just round it off. Let's just call it $5,000, right, with commissions and everything. And I was massively upset because not only did I lose 5 grand, I had to work my buttocks off to lose that 5 grand. I had to work so hard to lose that money, really. Like I think I traded like 400,000 shares that day. Think about that as a hyper scalper. So I stopped and I said, you know what? What I am doing is just not worth it. My wife was pregnant, and I said to myself, it doesn't really dawn on you being a father until you actually are one. I mean, even when, maybe for me personally, maybe I'm a little screwed up in the head, but maybe, I don't know. But when my wife was pregnant, it didn't feel like I was a father. Nothing in my life really changed. Yeah, all right, maybe she needs me to, run to the store and buy her fine. Like little things like that. But the feeling of being a father didn't dawn on me. And then the lesson wasn't learned that day. It was about a few weeks later, and this is going to be important for you guys, so please listen to this. I am getting to a point which is going to change the way you think. She took my hand and she put it on her belly. She's like, "Feel it. He's kicking." And I put my hand and you feel this like little like thump, like something kick your hand. She's like, "Push a little here." And you feel like this thump. And I'm sitting there and I'm like, and at that moment, I knew I couldn't overtrade. I couldn't overtrade anymore. Becoming a parent changes your perspective on trading. Not just life, of course, as you know, but trading. And I said, I can't do this anymore. And I said, I can't stress myself like this anymore. And I said, maybe I'll make less money early on, but I'll be doing the right thing. And you're coming from a person who scalps. I I wouldn't be surprised if I've done over 1 billion shares in my career, like trading. And that's an estimate. It could be more. So I was somebody who was just so actively trading all the time to somebody who's looking to do one trade a day, maybe two, three, like less than the hundreds of trades. And yes, if you trade one name and you trade it 10 times in and out, I consider that trading it 10 times. Doesn't matter how many names you trade. Obviously, if you trade 10 names, you had to do 10 different trades minimum, but you get the picture. Yes, so if you traded one name 100 times, you did 100 trades, you probably overtraded. And in the beginning, my P&L dropped in the beginning. Like I wasn't having like really $2,000 days, $3,000 days, $4,000 days anymore after that loss. But I was having like one, two, $300 days. Keep in mind, in 2014, I was a 15-year veteran of the market at this point. And I started to focus on the consistency of technical analysis. I told myself, and I started delving into psychology, not like all these other nonsense gurus who talk about psychology. I was talking to real psychologists and reading psychological studies, which have extremely nerd like terminology. And I'm sitting there with dictionary.com up reading these reports because I didn't know a lot of the verbiage being used and the words were too big in some cases for me. So I was reading that and I came across a study, I believe it was Yale or Oxford, I don't remember, talking about in order for somebody to be happy, they have to make money, or excuse me, in order for someone to be happy, they need 7 out of 10 life situations to be positive. Otherwise, they'll never be happy. And they'll actually form psychological toxicity, which will grow negatively on them. So I translated that into very simple, stupid. I said, well, I have to make money 7 out of 10 times, otherwise I'm going to be psychologically toxic. And then while I was making that money, I realized I'm starting to make money like almost every day. I'm doing one trade in the morning, 9:30. Maybe I'll trade max 10 o'clock, 10:15, and I'm done. 30, 45 minutes later, I'm hanging out with my pregnant wife at the time. I'm going out. I'm a lot happier. I'm in a better mood. It was like this huge weight was lifted off my chest, and I was making less money than I was before. And I knew if I overtraded, I would make more money. Yeah, I would have that $4,000 or $5,000 down day, perhaps, but I would start making actually more money. And it wasn't worth it because told myself, if I'm able to peel off this psychological toxicity, I'll be able to make more money in the future by not having the psychological toxic burden. At that point in my career, I was making between two, 300,000, let's call it a year at any given point. So even some people see the $5,000 loss, say you're making 200 a year, for example, it doesn't even matter. And that's where you're wrong. It does matter more than you could ever imagine. After I started doing that, my P&L dropped massively. I think I was having like $3,000, $4,000 months at that point. Obviously not enough to make like 200 a year. More $3,000, $4,000 months with the bills obviously going to increase with the fact that I have a pregnant wife and had our first son later, obviously. But what happened at that point was the next year, after I was peeling off my psychological toxicity like an onion and actually curing FOMO and actually curing these things in which so many traders can so many of these gurus, as I said earlier, could diagnose you with. I was actually finding a solution for it myself. And I was so psychologically toxic over trading for 15 years. Then 2015, and then on, I was just millionaire trader again. My first million was made in 1999 to 2000 when I started. After that, I was unable to make seven figures ever again, up until I peeled off my psychological toxicity, started making less money, and then rocketed back up and then seven-figure trader from there out, 2015 till present. And that was what I needed to do. And I didn't realize it because at the time I was making less money at first. So that was the lesson I learned from my last big loss. I learned how to become a millionaire again. And F the money. I don't need $1 million. You know how much money I give to charity? Like my bills, and I do have, I get, we eat all organic here and, all natural and things like that. But like, other than the Beyond Burger that I ate this year, which I had to try it once. Anyway, and I only had one. Anyway, like it came to the point where I was happy again. I was less snappy with my wife. I'm a nice person, really am. From the bottom of my heart, I do believe I'm a good person. I wish the best for everyone. I don't wish bad on one person on this planet. No one. I don't wish bad on anyone. I was a lot nicer. I was a lot calmer. My wife noticed I changed. She's like, yeah, it's really special. You really changed, she told me, when I was making $3,000 a month. And once I peeled off that psychological toxicity, it allowed myself to bloom and grow back into the trader that I could be. So a lot of times, realizing your potential requires you to slow down a little before you're able to speed up and grow again. And that's the lesson I learned from my last big loss. And I know you guys are laughing. Oh, $5,000 loss. You're up like, 75 grand last month in just one of your accounts. Like, oh, ho, ho. But you know what? It was life changing, that loss. And if you could learn something from your losses, and yes, I had more bad days than that years before. I had worse days than that, even, admittedly. But that was the moment, that was my last big loss that I learned a lesson from. Okay. So, as promised, what is working now on earnings? Oh, and coincidentally, I was telling you the story. Check out the little Confucius line right here. It doesn't matter how slow you go as long as you don't stop. That was, you know, and I know everybody loves the Confucius jokes out there, like man who stand on toilet is high on pot, and it gets dirtier than that. But like that is so true. That is so true. That it doesn't really matter how slow you go as long as you don't stop. I wish I was reading that Confucius. That's a coincidence that that Confucius line is there. I just picked a random thing off a website, and that was a positive quote that I filled in there. But that couldn't be more true for what changed my life. Because even though I was making less money by doing the right thing from a psychological perspective, not short-term financial perspective, it allowed me to make, a lot more financially speaking. So what's working now on earnings? Well, I'm just gonna simply go through a list here of the earnings I was watching from Friday. You could use other examples as well. I could show you the trade that I did in which worked, and let's just go through the list. So I have a list here. The middle list. Whoa, oh God, it's like inverted on the thing. Right over here, the Splunk, Foot Locker, Hib, WSM, SJM, and JW Nordstrom. That was from Friday. Let's go over. It literally is the 21 strategy. And we're going to start off with the top of the list, Splunk. This is the one I ended up taking. It was a nice bull flag. It was falling a little bit lower. By the way, I'm going to spoil you guys with updated version of the VWAP reversal tomorrow. So we still have great stuff coming to you. Right over here. So when Splunk broke 135.46, the blue line, you know what? I'm just going to show you on the one chart. I literally label it like one chart on the bottom left here because I just want to show you one thing. Watch this. I'm going to show you just a 21 moving average. Right over here, we're going to put it in light blue. Right over there, nothing else. You know. Okay, watch this. 5-minute chart. So this is all done on the 5-minute chart. So basically what I'm doing here is and I remove my other technical parameters because I understand that not everybody uses it. So if I'm demonstrating an example, I'd rather blank out everything and show you the only thing you have to focus on here. Nothing else matters but what you see on the screen here, with the exception of volume, which actually doesn't matter and it's still up on the screen. So that doesn't even matter to a certain extent too much. All right, so Splunk had earnings, and we're going to go through every earnings name on my list like this. You're waiting for the blue line to test and break. Once this blue line, which is again an exponential moving average 21, keep in mind if you're not using TC2000 or free stock charts, it doesn't include pre and post market data. So a lot of people will be like, Mark, my 21 is different than yours. A common solution to fix this would be simply to remove your pre and post market data when trying to figure out what an exponential 21 moving average is. There's usually an option to do that. I know there's on TC2000 there is, on Schwab there is. I think other platforms people have told me as well. So again, right over here, you can look in the top left. You can't see that. It says E average 21. That's 135.46. When the stock fell to around 135, that's where I bought it again. I'm doing this real time in the room. I'm telling people in real time in the room before I enter my trade. I'm telling them as I get filled in a real time basis. So again, none of the front run pump and dump things that too many gurus do out there. Be very careful of that. And it's pretty much impossible to like know, but pretty much if you hear a guru buying something at a certain price, and they say like I'm in, and then you go in and it just doesn't make sense how they made so much money. Yeah. Okay. So back to the point. I bought right over here. I bought the 136 calls for next week at $2 at the time, and it popped up a little here to 135.75 from when I was buying it at 135. Again, when the stock was at 135, I bought the 136 calls. Some people took common shares. Literally popped here, sold 2/3 of my position right over here. Yeah, I see what happened afterwards. 2/3 of my position done. Why? Because we're on a Friday. The market's grindy. I don't know if this thing's going to go up or down from there. But at the point where I buy it and the market pops, locking in the money. Why? Because A, it gives me psychological fortification. B, you know, I'm looking to be a trader for life. I'm not trying to retire next week on this trade, right? Sell out right here. Call a 138 target as I'm selling out as it pops 135.75 here, 136.16 or whatever. Like right around here, I'm selling. Wait for the stock to pop above 138 here. My calls are up over 50%. Dump it. Dump the entire rest of the position here. And yes, I said the stock could grind towards day highs as well. I didn't hold one option contract or one, I wasn't in any shares, but I didn't have any bullish position as it happened in my favor all the way to day highs. And even further, I mean, the stock went as high as, what is that, 140.65? Well, no, 140.80 right over here. We're buying over here. So that's the 21 trade I did. Now, going just real, and I'm going to show you other examples here of why this is working on all the earnings names in general. I had no FOMO. You think like I look at it and say, oh, my calls could have tripled or doubled or 250%. I didn't even blink. Like it, to me, like didn't even matter. Like I didn't even care. Like, and at the same moment, I'll take the flip side. If I sold here and then the stock went all the way down, I wouldn't have cared either. I would just be like, I don't care. It's done. Trade's over. Lock out 2/3 right here, just to zoom out and show you the perspective, the mentality. Lock out 2/3 of the position right here, sell the final third over here. That's how you let your winners run. You want to know how you let your winners run? You psychologically put the money on the house. Because if you're holding a position and you are up money and you're saying, I'm going to just look at me. Look how cool I am, bro. And you're going to sit there and you're going to hold the whole position while it keeps going up and up and up. The risk is on you. You are going to be stressed. You're going to be toxic watching it go up and down and up and down and up and down. Do you want to remove that stress while still betting on the position? Lock out the gains. Say, okay, I'm going to sell here. Not half, not a third. Don't peel off a third of your position. Fool. Sell the majority. Screw it. Because if you're able to do that, there's no pressure on you. So at that point, I was sitting there like this on the Dead Friday, watching Splunk just go up and it goes down and it goes up $1 and down 80 cents, and I don't care because the P&L is still green the whole time. I don't care, and I have all the holding power in the world at that point. But had I held a full position, as a generalization, I was very light in this. If I held the full position, I would be sweating bullets on these little up and down moves. Oh, I can't hold it. Oh, what's going on? I sold too early. But the fact that I sold so much over here, it didn't matter to me what it did. Foot Locker. This would have been a short because Foot Locker gapped down. Hits the blue line here, breaks through. You go ahead and short it. You get stopped out very early. And again, at the same time, I'm saying when you're up or down, you're locking in. You get stopped out early. This is a good example of it not working. Foot Locker here hits the blue line for the first time right here. You short it not at the blue line as it breaks. So just real quick, going back to Splunk, I didn't buy the stock when it hit this blue line here. I was buying it when it was down at 135, which is like right there. So I was pretty much buying it right there. The whole point is to buy it underneath. Let it go through. It's an earnings name. It has elevated volume. Don't short it at the level. So many people make that mistake on everything, like their triggers. Like if I'm looking to buy through 50 and hit 51, the one place you don't want to usually buy it is 50. Buy 49.90, buy 49.95, just to give you the perspective. So Foot Locker, I didn't take this trade, but like I said, I'm going over every trade. The only one I did was Splunk, and it worked. And again, I do this in real time. Goes through 39.18, goes up here, starts grinding up against you. Screw it, you're out. You take a micro loss. Move on. Next one on my list, I'm just going down the list. Hibbett Sports. Look at this. Hibbett Sports. And by the way, we actually called this on our earnings play sheet. I haven't been sharing that with you guys. I guess I'll explain why. But right over here, you broke through 28.57. You broke right over here through the line. You went underneath it. Again, I didn't buy this one. Immediately, you're up money. Immediately, you're up money. Look at that. Look how beautiful that is. And granted, afterwards, it did nothing. I mean, you were still profitable the entire time, and it just grinded sideways. But the whole point is, even though it didn't do much, you're buying in the lower end of the range here. Let me just move my mug. You're buying in the lower end of the range here, just like I did on Splunk, if you're doing this strategy properly. And right over here, it pops 56 cents. It pops 2%. Right over here on 1 5-minute green bar. To me, the trade's over. And if you left a little runner on the house, This whole down move and choppy action here wouldn't have even halted you. You would have been like, okay, I'll just leave a stop here at the bottom, and it would have gone up in your favor. WSM. This is one I tried to get in the room, but because I am, and people made money on this one, because I'm transparent, I literally, a lot of times I miss my own ideas. And again, they don't even cause FOMO at all. Very simple. Stock went through 67.22. I was trying to buy puts right over here. Stock went to 67.57. Next 5-minute bar dropped to 66.75. I know it doesn't look like a lot, but this stock literally dropped 82 cents in 5 minutes, in less than 5 minutes. People just locked out right there. If you want to sit there and hold, this high right here pretty much held. Well, not pretty much, it did hold the entire day. So if you were shorting there, that was it. I mean, it went as low as 66.15, and you could have been shorting right near the dead top here, which is actually the high of the day, where we call WSM short. Beautiful 21 short move. And again, you notice what I'm doing here. I'm not cherry picking, oh, you could have held the entire time. I'm not sitting here coming to you with a splunk and be like, look what a great bottom call we gave you there. And you could have just sat there and wrote it up. No, I literally talked about the psychology, how I treated it in real time, how I actually wrote it up higher. You're supposed to lock out your losses and gains. Lock out your losses and gains not based on a stop level. Lock it out chronologically speaking. You want to improve your trading permanent, and I'm going to give you the other 21 examples, but this is a golden rule right here, and I'm going to just trying to drop value at you guys at night here. Um, Before my mommy tells me I have to go to sleep and my curfew's up. No. But when you're looking at a trade, if you take all your winning trades, you want to know how to keep a real journal, not the BS journals as they tell you to do. But listen to this. You want to know a stat for your journal? Take every one of your winning and losing trades. Don't add it up. I don't care how much you made. I don't care how much you lost. Record the time for how long you were inside a winning trade. Add them all up and get an average. Add them all up and get an average. Now add up all your losing trades, just the time. I don't care if you're up or down, whatever. I don't care how much you're up or down. Just add up all your losing trades and see how long you're in the trade. Most traders tell me that they're in their losing trades 3, 4, 5 times or more longer than they are in their winning trades. You want to know how to psychologically help you? Watch this. It works. It works. Are you willing to do it? Or do you want to listen to BS out there which doesn't help anyone? I'm giving you salute. You want to know how I know my stuff works here? Because I screwed up so many times trying different systems with tens and tens and tens of thousands of traders that I got to the point of where I am now. That's all it is. People think it's like some magical thing. Like, how does Mark know all these answers? Because I screwed up royally on 99.9% of my other answers, and that's how I got to where I am today. Okay. So, for example, one trader here is like, you know, my average winning trade was like 11 minutes 53 seconds. Real trader from the room here. So you know what you do? You literally, I don't know if you have an iPhone, you just literally go right over here and you just literally set like the timer on the stopwatch here on your iPhone. It's like right over here on the clock app. You just hit the clock app. And what you do is you just literally hit the timer. And I'm going to set this timer just for example at 0 minutes and 2 seconds so you could hear what it sounds like. So you could actually change the sound, but listen to this. Hear that? As soon as you enter a trade, you have your timer ready. So what you do is this is the cute thing about it. So whatever your timer is, let's say it's 11 minutes and 32 seconds. You set it literally for 11 minutes 32 seconds. You hit start. After it beeps, you hear that? After it beeps, you literally do this. When you could turn it off, check that out. You could hit stop or repeat. Literally, it's ready to go to the next trade. So you don't have to sit there and scroll. Just, all right, I hope, look, I start a trade. Boom, start. And granted, I sat for 2 seconds just for, whatever, not to sit here and say, let's wait 10 minutes to hear the bell. You do that, you'll make money on your trades. You will know when to sell. You will know exactly when to sell. on average my winning trades last, I don't care if it's 11 minutes or 1 minute or 10 seconds, whatever your number is. I don't care if it's an hour or a day, whatever it is. Set an alert. And you know what you should do? Or I can't legally tell you what you should do. You know what I would do? As soon as that bell goes off, set a 1 cent stop or just sell out of your position no matter what. Just say, screw it, I'm out. You do that, and all of a sudden your hit rate's going to improve dramatically with a timer. Not here's a here's an imbecilic graph I made of how you're supposed to think and feel with FOMO. You want to know why all those graphs fail? Because the market keeps spewing new information on you. I just want to go through the other earnings name, then I'm going to add actually more value. See? So I went through Splunk, I went through Foot Locker, I went through Hib, I went through WSM, SJM, Smuckers, gapped up, pulls down for the first time, hits the blue line. Only matters the first time. If it hits it the second time, irrelevant. And it has to happen after 10:30, by the way. And all of them that I showed you did happen indeed after 10:30. So right over here is 10:30 a.m. Eastern Standard after the first hour of trade, wherever you are in the world. So it comes over here, hits the blue line for the first time, flushes through, hits $108. On the very next candle, hits 109.18, bounces $1.18. You could have caught that whole dollar. Easy money. And again, I'm not cherry picking. I'm saying the same thing, that you should react in the same way for every name. I'm not saying this is the one you should have held. And yeah, you want to leave a little runaround like I did with Splunk? Be my guest, but you need to lock out. You need to put the risk on the house, because if you're sitting there holding a position, watching it go up and down, you're going to get so psychologically stressed that when the market's actually coming to you, you know what it feels like when the market comes to me in like a Splunk position? They're like, here, Mark, here's a little bit of money. I want to take 100% of the risk on this trade for you. How's that? And I will give you, you're holding a third of your position. You're holding a quarter of your position. Let's say a quarter even. I'll give you a quarter payout on your position if it goes up here, but I'm going to assume the entire risk for you. That's what the market is telling you. Do you accept those terms? Is that good enough for you? Is that good enough for you? And no, I need to let this thing ride and ride, and good luck. Nothing's a worse feeling than watching a green trade go red. That happens to me almost never. Almost never, because I react in the way I'm showing you. Backtest JM, Smuckers, hits the 21 for the first time, breaks underneath, and as I always say, you're buying it as it breaks through. I'm not saying you're buying it at the line. I'm very clear on that. You buy through. Last one on my radar was JW Nordstrom, which is an interesting one right here, because it breaks through 37.84, hits 37.70. You're buying as it tests the blue line. On the very next candle, shoots to 38.12, and then eventually goes up a little higher and then falls a little. Yeah, because no, that's just the cues. And then, pops a little and then falls, but that's the whole point I'm making. This was the trade over here from 37.70 to 38.12. That's a 42-cent move. That's a 1% move. At best, you sell out. At worst, you lock in. And if you locked in here, you'd be so grateful as it pulled down, because you'd be like, oh, thank God I made money on that one. So even though I only did the Splunk trade that worked, using what I am demonstrating to you today, you could have made money easily 5 out of 6 names by taking the quick early trade on all these names. Now, are you hitting home runs? You're in the grindiest market. You're not supposed to sit here thinking, I thought last week was the hardest week this year. I very grateful that I came out ahead, but let me show you like a monthly chart of the triple Qs. This is what this month looks like. You literally have a $6.21 range. Compare that to last month where you had a $16 range. We have 3.5 days more, trading next week on this monthly candle here of the Qs. The market was crazy glued to the all-time highs. You're not supposed to make money. I want to share some important final thoughts here. Step 9, final thoughts on this video. First of all, I'm honored and humbled that so many of you guys actually logged in hundreds and hundreds of you on a night. The truth is, I didn't know how many people were going to actually show up to this video. I was just here because I was reading all these videos, and I am telling you, take it from a Wall Street talking head, a Wall Street guru, if you will. Honestly, I feel like I'm just another human being, just like you guys. I don't consider myself special. Um, People should really treat you as if you are something special with anything that you do in Wall Street. It should be very obvious to you. One thing that actually shocked me that somebody said that they love about my service here is that I'm always answering questions throughout the day. They say on these other service, sometimes they'll take questions for like 5, 10, 15 minutes, and then that'll be it for the day, or once or twice, and that's it. And I'm constantly doing it throughout the entire day, talking, being interactive with you guys, speaking with you. People are like, Mark, you make it easier than anyone I've ever met to follow in a trade. And that's because I'm telling you what I want to do before I do it, in any single moment in which I, physically or verbally, I guess in this case, can. And I'm just telling you guys out there, don't settle for anything less. Don't settle for anything less. A trading community is a very important part of your success. If you are somebody out there who feels it's not an important key to your success, you're probably in a toxic room or a toxic situation that you need help from. Take it from people like me who are just really, again, yes, yes, I do make money from people who are part of my room. Um, yes, it is a very micro percent of my entire annual income, and I do it to genuinely help people. I do it because I was that trader, went through so many struggles, and I feel so blessed, lucky, and fortunate that I was able to get to a point where I was able to peel off my toxicity and really help other people out there get to the point where they can be successful traders. And I know, my work will never be done, and I completely understand that. And again, I want to drop some valuable information on you guys here again, like just as I'm thinking out loud and talking out loud. The reason why most psychology things suck and are worthless, and again, I know it sounds conceited, with probably the exception of forget about the strategy. Like the strategies I give you will be great today, and they could suck and be worthless tomorrow, a week from now, a month from now. Every strategy I do, I accept that. And not only that, I embrace it. The Know Your Limit 21 strategy, which is what I'm showing you with that blue line, that hasn't worked for 3, 4 months. It works like 60%, 58% of the time, but to the point where it's not 70% plus, so I would never do it. It just started working again 70% plus of the time recently. I was able to see that and recognize that and shift my strategy. So on all these earnings names, I don't really care if I miss that initial 5 minute big move or 5 minute drop or the follow through move to the upside. It doesn't bother me because I know that I'm doing a strategy that's batting well over 80% in this environment on any single earnings names I wish to touch based on that Know Your Limit 21 strategy. So I'd rather, why try something that's not as good? Because I need to be part of every move? Of course not. The reason why these other trading services fail is because they don't evolve with the market. So what I've been trying to do for you guys here is literally showing you real-time evolutionary strategies. The strategy I just showed you, a lot of people are making so much money on it in the room right now. Like, Mark, this is great. It's zero stress. I make money. Like, people are batting 100% on it in the room, like that. But I'll even stop and take that back a bit and say, it's not going to work forever. But I promise you this, when it stops working, when whatever strategies that you're doing is not working, I'm going to be very early, going to nip it in the butt very early and figure out what is working right now. And it's that sort of constantly looking at the market and constantly putting your strategies to the test, which makes what we do here different. Because to me, it seems like all these guru rooms out there really believe they could just keep doing the same stuff over and over and over again and generate consistent profitability. That's why when I hear people using the same strategies, the same training course over and over and over and over again, and talking about consistency, it's a lie. You are a liar. Like that. Like I don't want to sugarcoat it. It's a lie. You know what? I used to believe that lie. I'll put it on me. I used to think that you could constantly do the same thing over and over again and expect the same results. And you know what happened? I made $1 million early on, and then I spent I don't want to say entire life. I spent probably a good 12 years trying to reclaim those days where I could do that again. And it only took me 12 years because I kept trying to do the same thing over and over again. And even though it was working for me, I would have like my P&L for the year drop like 90%, even though working, I was making money, but like I was dropping 90% off my highs. And I wish I had somebody like me telling me that at the time, that you have to constantly evolve with the market. You're never going to be smarter than the market. If you think you figured something out, it's going to change. There's going to be a point where it doesn't work again. And then there's going to be another point where it does work again. And there'll be a point where it doesn't work again. So the market is just a constantly evolving thing that you have to keep changing your strategies for. How do you think I just keep having these consistent back to back months? Why do you think I keep doing it? Because I'm willing to accept that what I know today might be irrelevant tomorrow, and I might have to change that. And until that, everybody can understand that any strategy that I teach you or anyone out there teaches you, like somebody talks to you and like, are you a struggling trader? I'm gonna show you the turning point of your life where you are going to figure out, through nonsense psychology or BS expiring strategies of how you're going to do it. I mean, if you want to believe that, and unfortunately there will always be people who do, I feel bad for you. That's why I guess I'm doing these videos here, because the truth is, gurus like us should be looking at ourselves saying the stuff that we do now might not work tomorrow. And that is a fact, no matter how much we like to accept it or deny it. And the only way we're going to actually continue to evolve is by constantly changing strategies, which, again, tomorrow I'm going to show you a new VWAP reversal strategy, is by constantly doing these things that are going to constantly change. So if whatever you're doing now doesn't work today, I got good news for you. You could be doing something else tomorrow that will. And that's the optimistic part about a changing strategy. Because if there was one strategy out there that somebody had the secret success formula for a strategy that works all the time, I mean, it's a lie because the market's going to keep changing, the market's going to keep evolving. And you have to be in an atmosphere where you're willing to change, tweak, and alter the strategies you do to maintain it with the market. Constant back testing, constant looking at a charts and seeing if you applied the same strategy on every name of your watch list. Would it work 7 out of 10 times or better? These are the things which will keep you ahead of the curve, not the idiotic trading journal, which everybody swears by, unless you're doing some of the things that I'm talking about, where seeing the times of your winning trades, you have to be more clever. You have to think outside the box. If you're doing whatever the Wall Street norm is, you're going to get the Wall Street norm results, which is 97 to 98% of you failing. And I will be here. I will be here fighting for you as much as I can, like staying up, watching these videos, trying to give you guys the advice and the help that you really need to succeed, whether you're with me or not, just by watching this video and spending your time with me. We have a limited time here on earth. We're all trying to help the people that we love around us. We have to just keep striving to do our absolute best. And by regurgitating the same nonsense that Wall Street does, it unfortunately creates a non-ending toxic loop. And I'm trying to break people free of that and understand, whether you like what I do or you dislike what I do, you can't really deny what I'm saying. And at least have that mentality as you push forward, whether it's with me or somebody else or whatever you do. especially if you want to be a trader in the market. I hope you guys enjoyed this late night episode. Slap the like button if you like it. Again, as I always say, I don't monetize on these videos. I couldn't tell you what color check YouTube or Facebook sends you when you monetize a video because I have never received it, but it does let me know that you like this content. Thank you so much for watching. I will see you guys tomorrow. We have two shows coming out tomorrow as well. Trying to put in the effort to really help you guys turn around and survive whatever market conditions you're going through right now. Happy trading, make money. I will see you guys tomorrow at 12 o'clock p.m. for the Newsbeat show. Tomorrow 7:30 p.m. for the Newsbeat show. Tomorrow in the Newsbeat live room for our group coaching session, which we gave you guys, and Monday morning on the Newsbeat live trading broadcast. Have a wonderful, wonderful evening.